Me right now, Ugodre Obichuku, who is the Chief Executive Officer at Nairametrics. He joins me from Lagos. Hello, Ugodre. Hi, how are you? Good morning.
Good morning, Nancy. Very fine. Good, great to be here.
Yes, great to be on my show. What has taken you this long?
Better late than never.
Better late than never. I hope we'll have a sweet one today. Okay, Ugo, let's get started. And I think I'll start from the comment by the finance minister yesterday. What do you think? He told us that the glass is half full. We shouldn't look at it half empty, that the economy is bouncing back, that we are not borrowing in terms of ways and means. It hasn't asked the CBN for help. What do you think? Is Wale Edu saying the right things? Or he's saying that thing to a category of people, perhaps not for people like us? So what do you think?
Well, I mean, he says the glass is half empty, half full. I mean, admitting, I guess, that things are in a way good and also bad. So, I mean, he's the Minister of Finance and coordinating Minister of the Economy. So, I mean, you would expect something a bit more, something positive from him, and that's exactly what he's done. But for a lot of Nigerians, I doubt that it's a case of half empty, half full. It could be 90% empty, 10% full, or the other way around, depending on who you are in Nigeria. But for a cross section of people that we've spoken to, and I'm sure Nancy, you've spoken to most already, being a journalist, they obviously would tell you that, look, it's far from being half empty and half full. For a lot of them, it's struggle every day. Prices are not letting up. Poverty is at an all-time high. The black tax, which a lot of us are very familiar with, is also at an all-time high because everybody's trying to figure out how to get by and how to survive. So it's pretty much tough for a lot of people, and at least for now. Government will probably tell you, look, there are a lot of policies that they've implemented that is working, is gradual, is going to take some time. And to be fair to him, yes, in terms of the macro indicators, perhaps maybe we're not anywhere close to, countries like Kenya or a lot of these countries that have a lot more fiscal challenges. But we are also in dire straits, and I think that if we don't take time, we could find ourselves in that kind of situation as well. In terms of public debt, our public debt is rising. So yes, we're no longer tapping into the ways of means as a source of financing. But in terms of government debt is also rising, as you've seen from the latest data from the debt management office. We're at over 60 trillion naira in terms of domestic debt. Or within the last quarter, we've added 2 or 3 trillion or so. So there's been an expansion of debt one way or the other. And then if you also look at the general macro, the macro levels that affect the regular people, exchange rates, we came into the year at 900 or so. Half year down the line, it's looking like we might close at 1.5 or slightly below 1.5. So if you look at that indicator, Nigerians are saying, look, where is the silver lining here? Where has things improved? Or are you going to look at that as half empty or half full? And then if you look at inflation rate as well, I mean, we're already at a 20 plus year high. We haven't seen anything close to this since 1996. And so for a lot of people, I mean, is that meant to be a good thing, or is that meant to be maybe, the light at the end of the tunnel, or have we seen the worst over? I doubt it. So when you look at things from that perspective, for a lot of people, it's actually half empty, if not more empty than full. Yeah, for the minister, perhaps maybe he's seeing a lot of things that we are not seeing. But for now, it doesn't really look good, Nancy.
Ugo, I want us to expand on why you said that Kenya and Ghana's situation is a bit different from us. What's the difference? Because in Kenya, too, at the time, fuel subsidy was removed. At the time it came back again,
Yeah.
they had to dip their hands into some funds to get it done because the economy was spiraling. For Ghana, too, same. Ghana is seeking, I think, $3 billion from the IMF. We have not sought money from the IMF. The World Bank has been giving us money. We went to the CBN to give us money. Why is it actually different? Because these are also issues.
Yeah, the difference is quite clear, and the difference is in the nature of debt that we have compared to the IMF. So compared to Ghana and Kenya. So Ghana and Kenya have debt to GDP levels that are precarious compared to Nigeria, and a lot of their debts are also foreign denominated debts, and some of these debts fall due imminently. I don't have the exact figures now, but I know the last time I checked, they both have debts that are falling due, significant debts that are falling due this year. You've already seen Ghana default on their debt last year and had to go into serious negotiations with their bondholders over restructuring their debt. So Nigeria is nowhere close to those sort of levels. A lot of our debts don't fall due pretty soon. I think majority of our debt, the significant portion of our debt falls due, I think, in 2 years' time. And then most of our debt is also, local denominated debt. So debts that the government have borrowed in naira, which, I mean, worst case scenario, you can actually print to pay those debt. And then the significant portion of the debt, like is ways and means. Out of the 60 trillion or so, 20 something trillion of it is ways and means, which the government is looking at paying over decades. So it's not a lot of pressure compared to Kenya and Ghana. And of course, if you now look at our foreign debt, 15 billion dollars of that debt is Eurobonds out of a total of about 42 or so billion dollars. A lot of the other debts are what you call multilateral debts. I think IMF alone, World Bank, we have 15 or so billion-dollar in debt that we're owing the World Bank, and then the IMF for another $2 billion. And the IMF debt is not really what you call a debt per se. So based on that, it kind of looks like we're not in the same bucket as Ghana and Kenya. However, what we do share in common is a need to increase the government fiscal buffers. So in terms of fiscal deficits, we're quite bad. If you want to look at it from that perspective, we are borrowing to fund government expenditure. As much as 50% of government expenditure is probably being tapped from the borrowing from the debt market, albeit the local debt market, which has its own implication, Nancy. But that is the reason why we're not as bad as Kenya and Ghana. However, we would at some point need to find a way to repay those debt. And that is why you're seeing a lot of the work being done by the Taiwo Daily Committee on tax reforms, because to repay those debt, you got to at some point decide whether you want to increase taxes, and if you want to increase taxes, by how much, and then whether you want to expand the dragnet as well, which is part of what they are looking at. The IMF has made it clear, if you read a lot of their reports, that you've got to find a way to increase taxes. Even the World Bank has also said that tax increase has got to be one of the measures that the government needs to put in place if they are going to be able to release, the debt, the 2.5 or so billion dollar debt they were looking to tap from the World Bank. So these are issues that we can't push, we can't kick, down the road. It's still going to happen, but I don't think, for these reasons, we're not in the same bucket as Ghana and Kenya.
Ugo, if you take a look at what's happening.
And by the way, Nancy.
Yes, go ahead.
Yeah. I was just going to say that, by the way, one thing a lot of people don't tend to also look at closely, it might sound a little controversial, is that as much as a lot of us were against the ways and means, the alternative to ways and means, if you had looked at the way the previous administration ran, their fiscal policy, right, they could have also had to tap the foreign bond market. And if they had tapped the foreign bond market, we probably would be in the same shoes.
With Ghana, exactly. Exactly. Thank you for pointing that out, because I was speaking with a guest on Dr. Ho Kitty. I think I spoke with him on Monday, and he said there's really no easy way out, as it were. The thing is for you to choose your hard. There will be hard decisions along the way. It's just that which way do you want to go? So it's about choosing your hard. So the last administration chose to print money, which, if you take a look at it, there was a lot of helicopter money globally, especially after the pandemic and as global economies try to recover from the pandemic, and even some countries that entered a recession. So choose your hard. Our hard was to print more money, and that gave us close to 30 trillion naira. Now, let me come back to what you said earlier in terms of, let's take a look at now even the World Bank and IMF. We see what's happening in Kenya and Ghana. But here, would you say that this administration is taking in wholesomely the recommendations of the World Bank and the IMF? These multilateral institutions have over the years told Nigeria, take off your subsidies, social protection, you need to give the poor money, and some all other issues, stop the defense of the naira that you were doing and all of that. And it seems, not that it seems, what this administration is doing now is all those recommendations. Many Nigerians are not, are too happy with that. Do you think that this administration perhaps even has its own blueprint, or is following hook, line, and sinker the recommendations of the IMF and World Bank? I've read their reports. I anchor most of their events here in Abuja. So I'm always in the room when they discuss this, and I take it up with them, also with government authorities. So what would you say about this?
Yeah, as you were talking, I was just looking down at trying to look for a tweet I put up, I think a couple of weeks ago on this same issue. And I'd mentioned clearly, I mean, there that look, a lot of the policies that you're seeing, as much as they're also ideologically in line with perhaps what the central bank governor believes and those in the expansive economic team of the government, are also IMF, what I call IMF doctrine. So, for example, they've said you got to devalue your currency. They've said you got to remove fuel subsidy. They've said you also have to make your currency, market determined, which is what they tend to always prefer. And then you also have to, losing interest rate and let interest rate sort of rise in line with inflation. These are all, policies that the IMF tend to recommend when your country is trying to go on a mend. And Nigeria has done all of it. So subsidy was removed last year. That's petroleum subsidy, for fuel subsidy rather. You've seen a huge part of the electricity subsidy go off this year as well. You've also seen the exchange rate, new forex policy in place since last year, where you've seen the currency basically market determined, and the central bank governor did make note of that in his most recent interview. In fact, now it's difficult to even differentiate between the official exchange rate and the black market exchange rate. Sometimes you can even get dollars cheaper on the black market compared to the official exchange rate. So these are all some of the things that the IMF has basically pushed for, and the Nigerian government has essentially implemented all through. One other area as well that they've also asked for is conditional cash transfers. In fact, the World Bank is very bullish on it. They believe that you should find a way of sending money to the very poor people out there who don't have any way to cushion the effects of some of the policies that the government have put in place. So that is also what the IMF is also asking for. And so, yes, to a large extent, all these policies that the IMF or even the World Bank wants the government to do is what the government has already done. And the government, in a way, kind of believes in it. And that's the huge difference between this government and the Buhari administration. The Buhari administration did not believe a lot in some of these IMF or World Bank related policies. And if you dig deep into the CBN at the time, Nancy, you know that a lot of the some of the deputy governors under Emefiele all had previous IMF. Some of them had previous IMF or World Bank affiliations, but ideologically different in their own approach, and that is why you saw a lot of all these heterodox or so policies of the Emefiele administration, which in hindsight didn't work. And so I guess the current CBN is saying, well, look, you've tried unorthodox, it didn't work. We have to do orthodox policies, and let's see whether this one will work. Time will tell who wins here. For now, Nigerians are bearing the brunt.
For now, Nigerians are bearing the brunt, and it takes me back to history. Of course, you would know economic history. When former military President Ibrahim Babangida, structural adjustment program, and all of that, the austerity. So if you take a look back to where we were and where we are now, of course, implementing those policies, when we look at, perhaps that's actually when the Nigerian economy also started dwindling. What do you have to say about that? That's one. Then number two, you were talking about your tweets earlier that you were looking for it, so I just had to go look for it now. I think you posted it on the 11th of June. So let me read it out. IMF and foreign investors to Nigeria. Number one, devalue your currency. Two, make the currency free. Three, remove fuel subsidy. Four, increase interest rate. Nigeria's government to IMF and foreign investors. Done, 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 done. Now the fallout, massive depreciation, mega company losses, skyrocketing inflation, borrowing costs soar to record levels. Then the actions, Nigeria's youth are jackbuying, unions are asking for higher minimum wage, multinationals are exiting, foreign investors still coming, IMF still talking. Very succinct way to put forward the impact of these policies, Tinubunomics as it were. So on those two things, go ahead.
All right. So, for the first one, yes, I mean, we're all students of history, and we've seen, different governments put in place different policies to turn Nigeria around. We've been hearing stories of how Nigeria is a giant of Africa, how Nigeria has potential, how all it needs to do is do A, B, C, or D, and then things can change. We've seen different policies over the years. We've seen different brilliant economic blueprints being put forward, whether it's needs or whether it's ERGP or whether it's a better life for rural Nigeria. We've seen different things in Nancy, and uh, the common theme here is that none of it has worked. None of it has worked at all. We've just been where we are. But the closest to anything like the working was under the Obasanjo administration, where at some point we did see economic growth of 6 to 7% at the time. But beyond that, nothing seemed to have worked. And to me, it all boils down to productivity and sincerity on the part of governance. Like we've always often said, Nigeria is one country where things are basically upside down. So if you look at the Maslow's theory of how wealth is created, you go from looking at seeing capitalism, seeing business as a way of acquiring wealth and then power. But in Nigeria, it kind of looks like it's the other way around. So people acquire power to acquire wealth. And when your economy is sort of construed that way, it's very difficult to see government officials sort of align with how economies or countries should actually grow economically, or how the economic construct of a country should be put up so that you can see economic growth. And so that's why today, you don't, despite all the policies that you've had, we still can't produce a lot locally in Nigeria. We're still falling behind in terms of local production. We still don't have very solid, invention. We can't invent things. Educationally, we're backward. We're seeing a lot of our brilliant minds leave this country decades after decades. It's still happening. We're still relying a lot on foreign imports, despite all the claims and push about local production. We're still relying a lot on foreign import. We still rely a lot on crude oil as a major export earner. We're not even talking about all the other solid minerals that we have. So we haven't been able to create anything new as a country in terms of, like, look, over the last 20 years, what is that new thing that you would say that we've done that has been the major earner as a country beyond, crude oil exports? And to a large extent, maybe the GSM
GSM,
revolution that
telecoms,
happened
yeah.
in the early 2000s. Beyond that, there's been nothing. The only thing you've seen is some of the huge efforts that the brilliant minds in the startup industry have done, and that's on their own without government help. They've just done it on their own. So in terms of governance, you haven't seen that, and that's why whether it's SAP, whether it's needs, regardless, whatever policy you want to call it, it hasn't really made any mark, because at the end of the day, we haven't been able to stimulate local production as much as we want to do. We haven't at all. This country is still predominantly service-based economy and still relies hugely on crude oil export as a major source of foreign revenue. No economy can survive like that. And then if you go back to my message. My message essentially is that, look, we've done everything that the IMF has said we should do, and we're doing more. And everything that the government also wants to do, we've done more. These things have consequences, and the consequences are what I've put out there. The consequences are that we've seen depreciation of the currency. We've seen foreign businesses decide, look, your purchasing power is too low, and there's no point in investing further in this country. So FDIs are also going out. Of course, we've also, it's almost like a revolving door. We've seen new FDIs come in as well, but mostly from South Asian countries who have taken interest in Nigeria as some kind of opportunity, but they are not fools as well. So you also have to figure out what their own real motive is. And then we've also seen borrowing costs go up. Companies can't even find financing, and even when they want to find financing, it's an exorbitant rate. So there is a price to pay. There's a price to pay for some of the policies that we're seeing. So the
Exactly.
point here is, the sooner we start to recognize that these measures are all short term, because if you don't start to see results early enough, something will have to give at some point. It's either government doesn't have the money to continue to even rule as government itself, which means they have to continue to rely a lot on debt, or people will get to a point where they just can't work anymore. Productivity will start to go low, or you start to see a lot of mass protests. You're already seeing the labor union saying, look, we can't continue with this sort of minimum wage that we're seeing, because if you have increased, you've basically devalued the currency, you remove fuel subsidy, inflation is at 30 something percent, then wages can't be the way it is. Again, it's just normal. It can't be because even wages at this same level can't even stimulate productivity. Companies don't even have any incentive to produce because if you produce, people can't even pay for it. People can't buy. And to what extent are you going to continue with shrinkflation, which you've been seeing every day? So these are all the issues that I'm basically putting forward. And the sooner things start to turn in a positive direction, the better for everyone. Half year is gone already. The next half of the year will be very pivotal for this government, especially, and for Nigerians at large. Nancy.
Let's take a look at perhaps the opportunity cost of the removal of fuel subsidy, because immediately fuel subsidy was removed, a lot of things started going haywire in the country. Now, looking at it through the rear view mirror, let's take a look at what has now been the opportunity cost. And now that will also bring me to the question of inflation. You know, the economy is hydra-headed. You they talk this one, you they enter another one, you they enter another one, you know. So that also takes me to the issue around inflation. Food inflation at over 40%. Headline inflation at over 33%. Cardoso has said, of course, we've seen month-on-month decreases. He told us that at the last MPC meeting. I'm sure that he will tell us that again in July next month when we gather. But the main issue now is that the cost of food is still high, and also the cost of medicines. Ugo, in fact, when I was thinking about this, I've had reflections all through. Was this from last week? Nigerians can't eat. Nigerians can't buy their medicines. There are a lot of people that depend on medicines. And what I just postulated in my mind is that life expectancy will go lower than 55 for women and 52 for men. It's just that we are not a country that measures these things. That perhaps from now to the next 5 years, Nigeria's life expectancy would have gone lower because we will have more malnourished people and people will die because the cost of medicine. A colleague was speaking to me on Monday when we had our editorial meeting that the medicine he buys for 1,800 naira is now 12,000 naira. So you can imagine for people that are living on routine drugs. What do you have to say about this, really?
Your colleague is very correct, Nancy. And even at Nairametrics, we've covered this. There's hardly any week we don't report, activities in the healthcare sector, especially from a cost perspective. One of the most recent one was on sickle cell, people who, victims of sickle cell, people who have sickle cell disease. From our own estimates, it's costing about $1 million for these guys to treat themselves. So you can imagine, how do they survive? Like, how much is their salary that's going to cost you almost $1 million for you to live with sickle cell? So these are some of the impacts that I'm talking about. So you're seeing people finding it difficult to have proper Medicare. You're seeing people finding it difficult to feed. You're even seeing people finding it difficult to transport themselves. And let's not also forget the impact of climate change. You all saw how Lagos was yesterday, and I'm sure there are several cities around the country like that are facing different kind of climate change challenges, whether it is through floods or through traffic or through the kind of air that they breathe. So these are all the fallouts of when you try to implement economic policies like this that you also have to cater for. And then when you have skyrocketing inflation, Nancy, and this is the problem I have with inflation, and that's why I hate inflation so much. Inflation is usually a precursor to a lot of very bad things in the economy. You start to see a lot of fake drugs. You start to see a lot of petty theft. You start to see black tax rise. Black tax is essentially every single person that you know asking you for some kind of support one way or the other. You start to see a lot of your brilliant minds leave the country because insecurity now rises. You start to see a lot of fake products, whether it is fake car spare parts or it is fake remote control. Even things like remote controls are fake now. There are several things that you start to see dumped in the economy. And then when you start to see things like Western companies exit your country, what it essentially tells you is that quality of products is now going to continue to dwindle. Because the essential message here is that the purchasing power of your economy is so low now that people who produce at least quality things or close to quality things can no longer sell in your market because your market cannot afford it. So there's just no point selling in that market. So they will rather leave that market and go to other markets where, to an extent, at least they can comply with minimum standards for the quality of goods that are being supplied in those countries. So that is why you're seeing a lot of this. If you check the country, the kind of companies that are existing in Nigeria, these are companies that cannot compromise on
On
quality.
quality.
So they have to be at a certain standard. Yeah. And for them to compromise on quality because of your purchasing power, they would have to sell their goods and services much lower at a lower price. And they can't do this. And so these are some of the challenges and the fallouts that you have here. And it's not going to stop. You're going to see a lot of fake things all across the country. And by the way, what is also very strange is if you are someone who travels a lot, Nancy, you find out that despite the kind of inflation that we're experiencing in Nigeria, prices are still nowhere close to where it is outside the
Abroad.
country.
Yeah.
It's still quite relatively cheaper. Yes.
Because
A
of our
bottle of
exchange
water
rate.
here is still about 250 naira. Exactly. Because of our exchange rate. So a bottle of water is still about 250 naira here. Abroad, a bottle of water is probably going for $1.50, which is over 2,000 naira
And
or
if you're at the
thereabouts.
airport,
So
it's higher than that.
much even higher. So
Yeah.
the bottom line is that for things that we produce here, we can still compete, we can still manage. But for things that we don't have competitive advantage of producing, that is where the problem is. And that is where agencies like NAFDAC need to work triple hard, or SON need to work triple hard, because you're going to see influx of substandard products in this country like you have never seen before. Whether it is tires, even tires for your cars, Nancy, you're seeing a lot of fake tires. You're seeing a lot of fake batteries. People are
don't even go there. Plugs. Plugs. The
exactly.
plugs of my
So
cars
you
were
find out
changed at
that
the time. New one. In fact, do
exactly.
you know the one that was brought for me that was working now? Belgium. The new one was not working. So we
Oh,
had to get the
exactly. New
Belgium.
ones don't work. Thank you very
You
much.
know,
So you're seeing a lot of second-hand ones
yes.
that are working. So whether it is tires, if you go and buy a regular tire now, give yourself 6 months to a year. It can't last.
Yeah.
You have to change
Yeah.
it. Even if it's batteries as well. Batteries, 3 months. They will tell you 6 months warranty.
Yeah.
With less than 6 months, it is dead. And these are all parts of inflation, because the original ones, the ones that are actually quite original that can last, is above the purchasing power of Nigerians. They just can't
Exactly.
afford it. And so what's the point bringing them in?
So
And these are the fallouts of policies that we put in place at the moment.
So as we end this segment, and I like that you brought this forth, that's the issue of skimflation, which is about reduced quality. That's skimflation. Then shrinkflation.
Shrinkflation.
Yes,
Yeah.
when shrinkflation is that now less volume, where we are seeing a lot of, our economy is a sachetized economy, as it were. Everything now is a
Yes.
sachet. So that's another dimension to inflation, which I've discussed many times on the show. But having said all of this, Ugo, what do you think we need to do to recharge Nigeria's economy in closing?
Very good question. I think that there are way you can look at this. There are short-term measures and there are long-term measures. I think that and then of course there are monetary and then there are fiscal. On the monetary side, I think that they are doing all that they can. There's really nothing more than they can do, because we've tried development finance already. We've seen where that has put us. So now they are going to the orthodox policies, which is basically just increase interest rates and move to a more market-determined exchange rate. And the central bank governor was very right when he said that they have achieved some kind of stable exchange rate. We did report that on Nairametrics last week as well, because exchange rate is now between 1,450 and 1,500. So that is stable, even though for a lot of Nigerians that is still too high. But that is stable, right? So then on the fiscal side is where there's got to be a lot of work, Nancy. On the fiscal side, we've got to see a lot of work there. I think for me, firstly, is optics. We're still seeing the government continue to do business like Nigeria is still a rich country, or like this is like 10 years ago. This is not 10 years ago. So government also needs to sort of level with Nigerians. You have to show Nigerians that you're also feeling the same kind of pain that they're feeling, and you're going through the same kind of pain that they're going through. So a lot of all these lavish things that we see in governance need to reduce drastically for optic reasons. And government also needs to cut its cost. We've seen the president give some kind of pointers towards the Ronsaye report, even though we haven't seen much happen in that direction. So that also needs to a large extent start to show in terms of results. We need to see government cut its own costs drastically. Where we have 30 plus ministers, I think that shouldn't even be happening at all. I think the cost of governance is still too high. We also need to have some kind of benchmark in terms of fiscal deficit. At what point do we start to reduce fiscal deficit? Government hasn't also come out to tell us clearly what is their inflation target. So we need to also say, okay, this is our inflation target, and this is how we get
In
there.
the budget for
So
this year,
that
it was
also hasn't happened.
21%.
That is unrealistic. You and I know it's unrealistic. It's not possible. So by now, you should have been having a review,
Yeah.
because there's no way in this. Even when we saw it last year, it was a joke, because we knew immediately, like, look, this wasn't well thought through at all. And then there also isn't a clear plan. We don't have a clear plan about what we want to do. We have a coordinating minister of economy. We need a plan. Where is this going to? How do you achieve 20-something% inflation rate by next year? Is it by continuing to increase interest rate? How do you start to attract foreign investors to come in and set up plants in this country? How do you start to stimulate local production, which is very key? So, there are a lot of, short to long-term measures, but I think for me, for sake of time, from the fiscal side, we need to see government get more serious. A lot of government ministers a lot more talk than action, so we need to see a lot more action from that point of view. I don't think that there are clear targets for them in terms of attracting investment. Every single ministry should have clear targets of how they intend to attract investment in this country, and how they intend to also stimulate local production. So that isn't happening at the moment. It's been a lot more talk than action. So we need to see a lot more action, Nancy.
Thank you very much, Ugo Dre, for joining me today. Let's do this again sometime soon, my friend. We shouldn't take so long again to speak with you. I hope you enjoyed your time with me this morning. Since it's your maiden, your inaugural, we need to wash up. All right. Thank you. See you later. All right, I'll be speaking.
Bye.
All right, I'll be speaking with Ugo Dre Chukwu, who is the founder and chief executive officer at Nairametrics. Let's